here with the Traders Club. Today's May 25th, 2018, Friday. Hope you guys had good week trading this week. Welcome to the market update. As I record this video, market should be open another 30 minutes. Market should be open. It's not a half day today, is it? Because I'm not seeing flashing lights here. But market should be open another hour and a half here. So you should be seeing a little bit of flashing lights on your left. Today we'll be looking at Spider IWM XLF. We'll call it a day. We're trying to keep this video short today. We got a long Memorial holiday weekend to look forward to. Weather is gorgeous today here in the Twin Cities. Hope you guys enjoy your long holiday weekend. Please go out and enjoy time. Enjoy outside, going out, meeting up with your friends, going out to eat. And you definitely need that after long days and weeks and months of trading. And I'm looking forward to this long holiday weekend. And you know, some people be like, oh, you know, it would be great if we have a 24-hour trading. Seriously, like, you really want to trade 24-hour a day? I mean, it's crazy. I know this is always already crazy. There's some people look at the market all day, from pre-market all the way to after hours, and then they be looking at futures from start to finish, and some people won't even go to sleep. I mean, seriously, like, that is not the life you want to live, right? Man, this is why I love position trading and active investing. You know, many of my followers know this, that I don't day trade, I don't swing trade. And you know what? A lot of people, a lot of swing traders, quote-unquote swing traders out there, that they call themselves swing trader. If you're trading for a couple days, that's not swing trading. I used to swing trade. When I used to swing trade, I used to truly swung. Like, I would hold things 2 weeks to a month. That's a swing trader. Holding for a couple days, you're still, in my book, I categorize you as a day trader. I know sometimes I make fun of day traders, and sometimes I get these comments like, why do you always make fun of day traders, you know? I think a lot of day traders will start to understand later on why I did that, because it's just not a good way to truly make good money. I mean, yeah, you can day trade, make money here and there, but look at your progress. Look at your year-to-date performance last couple years, last 2 years, last 3 years, and tell me what your overall gain is. Look at your year-to-date this year and last year and tell me overall performance. That's the thing about these people on Twitter. They're like, yeah, I just made 10 grand. I just made 5 grand. Oh, I just made a couple $100 today. See, ask them to show you last 2 and 3 years year-to-date performance graph from their brokerage firm. Not just daily gains, because anybody can make 10,000s here and there, but it is hard to continuously make money year in, year out on a year-to-date performance scale. You see what I'm saying? It's easy to make money one day, boom, but next day they'll tank that. You see what I'm saying? So, you know, I used to be a swing trader. When I used to swing, I used to really swing. I would swing trade for 2 weeks to a month. I don't know if there are people still follow me when I used to short the hell out of Apple. Do you guys remember that? I don't know if you guys still remember or not, back in 2012. Actually, that's kind of what made me my infamous article, 10 Reasons of Why I Am Extremely Bearish on Apple, which was published somewhere here, and I was expecting Apple to crash. And this was before the split. My target price was $360, and it came down $380, and that's kind of what put me in that spotlight, I guess, on Twitter, and then my blog starting to. But I used to swing, and I used to go short on this. I was short, and then I'll swing it. I'll go short, I'll swing it. I'll go short, I'll swing it. I mean, you know what I mean? It wasn't a couple days thing. It'll be, you know, and I'll go long, and I'll swing it, I'll go long, and I'll swing it, you know. But swing trading, it gets very difficult. Well, I'm talking like couple days swing traders, because you miss out big moves. You know that. Swing traders out there, you know that when Apple did from here to that, you miss out on a big move. I mean, swing traders, what happens even here? How many people are there really? You could say that from here to here, they fully was able to ride this. Not swing traders, not day traders, not anyone who thought that the market whole thing was gonna crash or there's a cautionary signal, warning signal here. Because you thought there's a cautionary signal here, do you really think that they're gonna go full on bullish from here to there? No, they're like scalping, or they just maybe go long a little bit. They're just still scared, They're still cautious, so they miss out on this move. That's the thing about swing trading, is that you miss out on a big move when it happens. And then when market doesn't really trend like this, you get chopped to death. That's why I love position trading, because with position trading, how I trade, it's, just looking at Spider here, I was buying these dips, and I was accumulating stocks. So all throughout 2017 and, in the summertime, not only I was buying indices, calls, but I was accumulating stocks, shares, buying energy calls and different indices and sectors. And when this thing happened, I was holding it full. I was closing out like maybe one third, but I was able to just fully ride it. And I have planned to do similar to that here today, where I believe that Spider can get to 300, 310. And the 300, I think, pretty good target for before the year end. Pretty good target. We'll just put that right there. 298, 300-ish. Here, let's get into the charts here. Obviously, this line chart, I wrote that because if I actually go to line chart here, we actually clear that downtrend resistance here. You can see right there. You see that line chart? So we actually cleared it. If we just actually look at this here, we're consolidating after move up here. This is actually bullish continuation pattern. However, from my experience, statistically speaking, it actually could go both ways. Index. If it's an individual stock, it has higher probability it's going to break to the upside. But when it comes to indices, I tend to see these kind of consolidation patterns that they usually fail to the downside. So what happens is, if this thing gets down, like we said, downturn, and then consolidates, usually that's a bullish signal. Same thing happened here. It came down and then consolidated, and we got up. So it does opposite of what most people are thinking. That's what the market is for. You see what I'm saying? Just because you read one book on technical analysis, just because you have these free charting software in your computer and you drew a couple lines, and just because you saw this tweet, right? This tweet, oh, remember these patterns. This is a bull flagging pattern. Oh, this is a bear flagging pattern. Oh, this is a wedging pattern. Oh, this is a diamond pattern. You know how people do that? People like put all these patterns, they tweet it and say, well, print it out. This is your cheat sheet. And then put it on your computer, next to your computer, because you're gonna need these cheat sheets. You know what I'm gonna tell you? Throw that away. Burn it. Burn it. Because none of that crap works. Burn that shit, man. Seriously. And I will say it arrogantly. I say it to help my genuine followers, because you get fixated on these stupid patterns. And you think because you got this bull flag is 100% guaranteed. So what you're gonna do? It's gonna make you you're gonna start to become like these scalpers, and you're gonna be like, oh, I'm gonna go long right there, and I'm gonna place my stuff right here. Yeah, see how that works out? Because you know what is gonna happen? It's gonna come down, take your stuff, and then reverses on you. This is why, guys. You gotta think. You gotta start understanding these stupid things that people talk about on these Twitter, and you get like hundreds and thousands of retweets and likes. Most people are dumb. So these stupid people are retweeting and endorsing stupid people. And so now, somehow, some way, just because you get thousands of retweets, you think there's a legit information. So you know what I want you to understand? Legit information is not retweeted like that. Think about it. Most people are dumb in this world, right? Most people are broke. Most people are fat. Most people are miserable in their life. They hate their job. Most people in trading world, they're broke. They lose money every year. There are only a handful of people who makes money on a yearly basis. So and also we all know this. Market fools the majority, right? We all know this saying, market fools the majority. So why do you want to follow, quote unquote, majority? You see? So stop following majority, right? Stop following on these stupid patterns you see on tweets, and that's what they call cheat sheets. These pattern recognitions, or you know what I mean? These people tweet it out, and these, oh, such a great, beautiful quotes they put on every day, right? It doesn't help anybody. All day long, you can read these tweets and quotes and patterns and all these shenanigans, right? They'll never tell you their entries and exits, right? Because they don't know how to do these things, right? Just because of you, every single day you follow these people who tweet every day on these such a nice sounding quotes and these patterns. See if you actually, it improves your trading life or trading skills. And you might think they're like, yeah, it actually played out, okay. I actually tried it, it played out. Oh yeah, keep trying. And come back to me after a year and show me your year-to-date performance. See how well that went. Man, I didn't even have a plan to rant on this video, but sometimes it just comes out. Do you know why? Do you know why these things comes out in my videos? Because I care for people. I really do. I really do. I come from a small town here in Minneapolis, right? I live in a suburban area. I live in a remote nature surrounding. It's not completely nature surrounding, guys. I'm not living in a farm or anything. I mean, it has everything. I can go to places and go out to eat and stuff like that. And I love nature. This is where I live. I'm not a city guy. I don't like being in the city. And I love people. True friends are the ones who tell you the truth, right? Right? Wounds from a friend is better than kisses from an enemy. Enemy will tell you what you want to hear because they want to sell you something. Friends tell you what you need to hear. So I'm doing this for my genuine followers. So looking at spider here, bull flagging pattern, yes. Can it break higher? Yes. But also it could break lower. You should be open-minded for that. I almost feel like there could be one last shakedown where this thing comes down, maybe hit my 50%, and then gap. But the worst case scenario, this thing comes down all the way to retest maybe 200. Or it's going to come and fill this gap. There's island reversal here. Fill that gap and continue. And I'm not being bearish or anything like that, but I'm kind of leaning towards a little bit short-term bearish here. So basically, if we lose this level, if this thing continues lower, I'm not gonna be in shock. I'm like, yeah, that could. But if it continues higher, breaks out, and it actually plays out, this bull flag play out, that's a bonus. You see what I'm saying? I am always open-minded. I'm usually very neutral when it comes to short term. But let's talk more about intermediate term. Intermediate term, I'm bullish. Intermediate term, I believe we're gonna get a new all-time high sooner than later. You know what I mean? I don't know exactly what time frame, but I think once we come and fill these gaps, I think that's game over for bears. Or even once we break out of this, probably it's going to be over for bears if we start to cultivate something like that. So I've written enough articles to let you guys know that where I stand, right? Where I stand in the overall market. I do believe the market is bottomed, and we're in this stabilizing phase. And in that stabilizing phase, we're going to see some head fakes, shenanigans, up and downs. So let's see how it plays out. We'll follow up next week, see if this bull flag either break to the downside or break to the upside. Either way is fine with me. If it breaks to the upside, probably gonna get up here, probably fill these gaps here, and then once that gap gets filled, we'll probably gonna see a pullback. If we come down, the next support would be the gap fill. Even if we kill that island reversal, it's not the end of the world for the bulls. So first support will be 269, 270. 50 MA is in that vicinity. 50 MA did act as strong resistance in the past. So 50 MA should act as pretty strong support. So let's see how it plays out. If it should price continues lower below the 50 EMA, then I think 266 is a pretty good support, which is that 50% retracement coinciding with that prior resistance level there. So those are the levels to watch. Let's continue with the IWM. IWM obviously a champion, broken out of this months of consolidation pattern here, higher lows. And then you can see right there. So as long as we continuously cultivate higher lows and higher highs, I think the trend is continue. I've been talking about that. I've been saying that the Russell is going to lead probably this year, remainder of this year, next year. I believe that I think Russell 2000, the small caps, is going to continue to lead. And this possibly some kind of a bull flagging pattern again could be, or we could just lose and come right back down. I think if we do lose that 160, next level is 157, and that is I think strong support because I think 50% retracement, yes, here you can see in that vicinity we got 50% retracement and coinciding with the prior resistance, and we got the 50 MA in that vicinity. If this thing does come down to 157, that's a great level for an entry there. I'm not talking about day trading, I'm not even talking about swing trading, but I'm talking about position trading. Next one, XLF. Let you guys go with this. You see what I'm saying? You see, here you go. You see what I'm saying? There, this is what I'm talking about. Oh yeah, yeah, this is a bull flag, yeah, it went up. I saved here, let's go over here. I'm gonna remove I'm gonna end this video. I'm gonna end the video with this. Because I want to make a point. Oh, look at that. That is one beautiful fake out. Okay, right there. Yeah, right there. All right. Okay, I saw this tweet. This guy tweeted out, it was a cheat sheet. It said this is a bull flag. Entry is right here, and then stop is right there. Oh, okay. Oh, okay, yeah, so I enter. It stopped you out. And you know what a lot of people is going to say? Well, it's a small loss. It's just a small loss. Yeah? You keep paving a small loss over and over and over again. Right? You know what it does when you keep getting these small losses? It does psychological damage in your brain. And it feels like you can't get anything right. You know exactly what I'm talking about. This is what I'm talking about. Head fake looks like a fat fake breakout, and then it comes right back to the downside. You see? I won't be surprised. I mean, if this thing does, let me actually throw a little fib. I actually did throw a fib there. You can see, I'm gonna throw right there. So. Yeah, so I think this is the first level where there's a first level support that we're holding. I think there's a good chance either we bounce from here or we'll come down. Let me just in case some of these levels. I think these two levels in XLF. Yeah, I think some of these levels even could be a good entry. I'm not talking about day trading. I'm not talking about swing trading, but I'm talking about position trading. Potentially invert head and shoulder, I'm not sure. I mean, that's the thing about the market is market will continue to do that. You can see right there. Oh, look at the resistance K. I'm gonna go long because it break above it. Well, you can see now it's coming back down. So it's not just above or it's below. People say above this, it's gonna go higher. Below that's gonna lower. Did it go higher? No, it didn't. It didn't go higher. Well, below this, all hell's gonna break loose. Well, it kind of got slowly intraday below. but then managed to bring it right back up. That's how markets work. How many people do you think got stopped out right here because their stop was just below this level? How many people thought this was a long? How many people thought this is a bull flagging or pennant pattern and thought that was a breakout? You see what I'm saying? And that's how the market works. Market always fools the majority. You know what the market is? Market is designed in a way that it wants to make sure least amount of people are on board before it makes that move. That's exactly what happened in 2017. 2017 was epic. I just this right there. Oh my God, it felt great. Because all these bozos, right? All these bozos online, they're like, oh, oh, okay, I don't know what I'm doing. Oh, I'm just very miserable. I'm just very fearful person. So yeah, I'm really scared. But I mean, yeah, my tweets get 1,000 tweets. But really, when it comes to trading, I'm scared. I don't know what I'm doing. And then, what happened was like, market just thrived, went on and on and on and on for months. Just biggest bull run we've ever, as far as the pressure and sentiment is concerned, first time in like 30 years. It felt great because, well, I was able to fully, benefit from it. But man, market just left everybody behind. Everyone behind. It is great. Right? That doesn't mean like I'm a sinister person, that I don't want everybody to, I don't want people to like make money. I wish market is the place where we come in, we can all be friendly and we all make money, but that's not how the market is. That's not how the market is. The reason why I said that is because these people act like they know what they're doing, but they're actually doing more harm, right? So think market fools the majority, and majority people endorses certain people. Majority, quote unquote, majority people retweets and likes certain tweets. And if majority people like certain tweets or ideas, it means that idea is wrong and stupid. Go look for tweets, go look for traders that doesn't shout out like, yeah, I just did this, I made that. It's quiet, you know what I mean? Good amount of followings, but you know what I'm saying? But he's not always taunting that he called this, he called that, but he's solid in his game. He doesn't easily change his views overnight. Like, crash is coming. Next day, oh, we could be bullish, a reversal. Like, you know what I mean? Day and night different in 2-day time frame. Those people are the people who live life fearful. And because of that, when they come to the market, they can't make up their mind. This is what I call ambivalence, right? Ambivalence. Of course, there's always bearish and bullish data in the market simultaneously at the same time together. And because of it, most people doesn't know where to put their focus, how to prioritize, right? So anyway, hope that it helped you. And I'm talking to my genuine followers out there who understand where I'm getting it. And I know you guys appreciate it. Have a long holiday weekend. Enjoy your time out with your friends, with yourself. Read a book or something, right? Go outside and smell the roses, right? And I'll talk. Oh, good luck trading next week. And have a wonderful weekend.